Some of the agents were saying like they had listings selling in 1 to 2 days, like literally putting them up 1, 2 days, offers immediately, like 2, 3 offers.
You're listening to the Ottawa Real Estate Podcast, your go-to source for all things Canadian real estate. And now, here are your hosts, Paul Stevenson and David Warren.
Hello and welcome back to the Ottawa Real Estate Podcast, your go-to source for all things Canadian real estate. My name is Paul Stevenson. I'm joined by David Warren, both level 2 mortgage agents. David is the owner at Referral Mortgages, and we want to thank you for being here, for listening. As always, you can reach out to Dave and I if you have any questions about mortgages, if you have an upcoming renewal, or you just want to chat. We're available. We're here. Thank you to our amazing sponsors, and thank you to you for listening. Dave, how are you? What's going on? What's new?
Doing well, sir. I'm doing well. It's my, we're Tuesday the 17th. It's like I've already gone through a week. Actually, it's St. Patty's Day. Talking about lucky day.
Mm-hmm.
Yeah, it feels like yesterday was an entire week of work. I feel like it already should be the end. It's been a while. Extremely busy last few weeks, I feel, but things are good. Was able to get to a World Baseball Classic game in Miami on awesome. Friday night, which was a lot of fun. People that listen regularly know I'm a massive baseball fan, so that was awesome to get to. Just trying to weather things out.
Yeah, speaking of, like, it has definitely been busy. I know we talked last week about the stats and the days on market essentially cutting in half. We have a little mastermind kind of real estate group out here in Carleton Place. We met last week and it's pretty much 50-50, like agents, mortgage agents to realtors. So it's a good balance of like getting a finger on the pulse as to what's happening in this area or just in the market in general. And some of the agents were saying like they had listings selling in 1 to 2 days, like literally putting them up 1-2 days, offers immediately, like 2-3 offers. Other people listing properties that had been sitting for 30-45 days, relisting. So we were talking about that previously, about how the numbers are, I don't want to say skewed, but they're impacted by the fact that agents are constantly like taking listings off and reposting them. And interesting enough, one of the agents was actually explaining to me that when you do that as an agent, if you're the buying agent, you have to really dig for that information to find out if it is actually been relisted or if this is a new listing that has never been seen before. So, if you're going to negotiate and this property had been sitting for 2 months and now it shows as only being up for a day, like that as a buyer, you've kind of lost a bit of your negotiating power if you don't know that information, right? If you just think this is a brand new listing and so on. It is what it is. But anyways, all this to say, it was very interesting to hear different people's view of what's happening in the market, because it seems like everyone, market picked up. Obviously, we had that cold flash that just happened, which really does kind of freeze the market, pun intended. But whenever the warm environment happens, especially after March break, I feel like after March break is when things typically kind of take off. But the last 2-3 weeks have been noticeably busier. Mm-hmm. And it seems like that's everyone's sentiment that is in the market.
Yeah. Last week, definitely saw a number of purchases. But again, and I will reiterate, I said the same thing last time, like the busyness is really in the renewals and how many renewals, and kind of seeing and really with the timing of the market with where the bonds have gone and lender rates have gone as well on the fixed. It has kind of pushed those conversations to needing to kind of converse sooner than later on some of these before the rates really kind of jumped up or anything like that. So yeah, that kind of continues to be the, at least for myself, the ongoing theme.
Yeah, like I read this morning, there was a Canadian Mortgage Trends article, not to get right into the articles right away, but they were talking about the renewal cycle stress and basically the fact that this is kind of the big story right now. Huge, obviously massive wave of renewals happening right now. We've been talking about for 6 months or so. 2026 and 2027 are kind of like a huge wave of renewals. 60% of borrowers renewing are going to see an increase in their payments, probably more than that. They say 60. I think it's probably like 90 to 95. And this is really where people are getting hit. And I'm seeing some people now coming back that, when they renewed 2 years ago, had to renew into, an alternative or kind of like a different type of lender to get them back into a good place. And now they're kind of coming up for renewal. So now we're revisiting that again in a slightly lesser rate environment than 2 years ago, but still heightened from where they were, 2 renewals ago, I guess. So there's all these kind of very complicated conversations. And I kind of joked with a client yesterday. They called me and they're like, my situation isn't easy and and giving me their whole spiel. And I said, you know what? Here's the thing. You're in good company. Like no one's situation is easy. Like every conversation we have is challenging. Every file is complex. So like there's no easy conversations anymore. So if anyone, like if you're listening to this and you're up for renewal, you're stressed about what's happening, or the unknown is usually what is the most fearful. Like reach out to us. Let's have a conversation about your renewal. Even if it's a year or a year and a half down the road, we can at least kind of explain to you what's expected and what steps we can take to try to mitigate that fear, because it is like, we do this every day, and sometimes I think we take for granted what we understand about the industry or what's happening, because we are able to sometimes explain. It's oftentimes, like I said, just that fear of the unknown. Like if you don't
Mhm.
do this, you do this once every 5 years, and you're reading all these headlines about huge price increases and rates are spiking and like you're just filled with fear and worry, right? So having that conversation, just kind of talking yourself off the ledge a bit, and having a professional conversation with someone that can explain to you exactly what to expect. Here's how much your payments are actually going to increase. Here's a likely rate you might get in 4 months, 8 months, 12 months, at least allows you to sleep at night, and not be stressed about this constantly. You shouldn't be stressing about your mortgage every day, every week.
Yeah. Yeah, I mean, I similarly had a conversation with somebody yesterday, and they were commenting and asking my opinion of fixed versus variable, and we were kind of talking about that. And they said, kind of, with the geopolitical landscape, we're not sure, and we're really worried about where rates are going. And I kind of said to them, really, every year there's something in the political landscape or something going on in the world that we can't predict or that is currently going on. I said, look back to 2021 when you first got this mortgage that's now up for renewal. Look at the world we were living in. There was a lot of unknowns. We were facing, free money and global shutdown. Now
Yeah.
we've got, tariffs that people have kind of forgotten about because there's wars going on. So, when looking back on things we were talking about 4 months ago at the end of last year and whatnot, we were talking about the tariffs. And then, and now we're talking about oil prices, and we're talking about, you know, before that, Venezuela. And now there's consistently always something going on, or tensions. I said, my advice was really to look at your own budget, your own stresses, what your preferences are, kind of see through what's going on overseas, which, yes, that does impact. And we talked about it last week, and we'll talk about it a little bit more today, but it does obviously impact mortgage rates. But if that's something you're concerned about, then look to locking in a fixed rate. Like, you don't want that mortgage to be worrying you on an ongoing basis, but, kind of, there's always going to be something that's going to be, a stressor. So if that's it, like, really kind of just look at the here and now of what your budget is, look to locking in a fixed rate, look to extend that amortization net, looking first and foremost at your personal budget. But yeah, kind of seeing through the murky waters.
Yeah, and I think you make a very good point, Dave. And people oftentimes don't understand how much can happen over a 3 or even a 5 year term. Like 5 years is a really long time. Like 5 years ago now is basically we're just 5 years out of the peak of the pandemic, which feels like it was a decade ago, but also feels like it was yesterday. It's kind of this weird dynamic. But especially with everything that's like this week, Meta, which is, Facebook, WhatsApp, Instagram, like basically massive company, right? They just laid off 20% of their staff because of AI and all this new technology and everything that's coming. So 5 years down the road, I think the world is going to look very different. And between now and then, there's going to be thousands of headlines, thousands of changes in the economy, in the market, in bonds, in oil, in everything in the world. So to guess where rates are going to be in 3, 5 years, or to guess, try to predict or worry about what's going to happen, like it's an impossible endeavor. So like,
Mhm.
just do what you think is best for you now. There's also, I think you mentioned it too, this conception of people think, oh, I have a 25-year amortization. When I renew, it has to be 20 or it has to be 15. Like they feel like they have to constantly be lowering this or they failed in some way. And ultimately, it's just a monthly payment obligation. Like the home value, whether you increase your amortization, lower your amortization, the value of the home itself is still likely going to increase over time. So like you're still building that equity, but you need to have a monthly payment that is affordable. Like if your payments are increasing and it's unmanageable, you're shooting yourself in the foot. So it's better to just have that conversation, peel the Band-Aid off, restructure your finances so you're in a position where you can actually start growing and saving and be secure. And then when you have that extra money, you can shorten that amortization by making a lump sum payment or increasing your monthly payments when you can, right? Like when you're in a position to do that.
Yeah.
So I think having those conversations early, as you mentioned, is important because you can allow yourself that breathing room to get back into a better financial position so that when these unexpected things happen in the coming years, you're in a position to be ready for it and you're financially stable to take them on, right? As they come.
Yeah, no, all great points. And really kind of, something you mentioned is looking at the here and now where things are at. Looking at the present of, 2026, what news, where we're at from an economic standpoint currently, and not trying to wrap your head around 3 years from now, because no economist is able to do that. The Bank of Canada isn't able to do that.
Yeah.
So how are any of us to do that? And so kind of looking at the here and now, really we can look at tomorrow being a Bank of Canada decision day, March 18th, when this episode comes out.
Yes. Yes.
And there's, the markets are factoring in a 92% chance of no change. And the US Federal Reserve also makes a decision tomorrow, the 18th, and that is a 99% odds of no change. We're not expecting anything, even though there was some great news out of the Canadian economy from Stats Can, in the sense that inflation really plunged, really kind of coming in at 1.8, 1.78 to be exact. In February, the estimate had been 1.9, and prior to that, 2.3. So, which was obviously great news. The core measures also eased, with CPI median falling down to 2.3 and the CPI trim edging down to 2.3 as well, which was kind of ticking down. Kind of the tame. So this is from a CIBC Capital Markets, commenting that the tame CPI report will be welcomed by policymakers ahead of the energy price shock, as it shows that labor market slack is keeping a lid on core prices, with the issue for the Bank of Canada being how long the oil price shock lasts and its magnitude. So, what we've kind of alluded to or spoken about is obviously how, some of this overseas and where the oil prices are and how long that conflict lasts is going to affect what the Bank of Canada does, what the equities and bond market does. But thankfully, yesterday, crude fell for 5.3%, below $100 a barrel, which was great news for everybody. And that's really because a few shipping vessels were able to navigate that Strait of Hormuz. So where that 20% of the global oil comes from, and some downward pressure came from increased imports from Venezuela and expectations of an upcoming release from the U.S. strategic oil reserves. So, that put, with that coming yesterday, we actually saw the 5-year government bond that impacts fixed rates come down eight basis points, which was a needed tick downwards, as the past 10 days prior had been basically kind of a shooting up hockey stick, if you will.
Mm-hmm.
So really kind of with that, the news that oil tankers are moving through, and are soon to be moving through, is positive for the global economic stability. So we're going to kind of keep an eye on that and really watch that as we proceed kind of over the next couple of weeks.
Are you thinking of buying or selling a residential property? Relationships are at the heart of every real estate transaction at Gertin-Poirier Avocat Lawyers. We love to bring residential buyers, sellers, agents, lenders, mortgage brokers, and the law together to close the deal for you for an effortless client experience that opens doors. Call us at 613-744-4488 or visit our website at gertinpoirierlaw.ca. Let's get to the heart of your deal. Are you trying to grow your mortgage business? Centum has the tools and support to help you take your business to the next level. Get access to everything from free unlimited custom marketing to daily direct pay. Find out what your business can do with Centum. Learn more at joincentum.ca. Your home is one of your biggest investments, and the team at Big Westboro can help you protect it. Our expert brokers will find the perfect coverage to keep your home and belongings safe. Call 613-239-5792 or visit thebig.ca/Westboro for a free quote. Think big, protect what matters most. Even the best photographer can't hide drywall dust and paint splatter. And every day you delay listing could mean missing peak spring pricing in Ottawa. A to Z Cleaning Expert gets your property truly photo ready. Don't risk going to market half ready. Mention TOREP at atozcleaningexpert.com to receive priority scheduling for your next listing. This episode is brought to you by Easy Neon Signs. Visit easyneonsigns.ca and use the promo code TOREP, TOREP, to get 20% off each and every order. easyneonsigns.ca, Canada's finest custom neon sign maker.
Yeah. The shelter inflation hit a 5-year low actually at 1.5. Rent CPI dipped as well, which I think we talked about last week. It was, I think, 17 months in a row that the rent had decreased. So this was kind of an excerpt from Stats Canada. It says a slowdown in the all items CPI on a year-over-year basis was largely driven by a monthly increase in prices in February 2025, when the GST HST break ended partway through the month, and as a result, consumers paid more for affected products. This month-over-month increase fell out of the 12-month price movement in February 2026, resulting in a decelerating base year effect on headline inflation. So I know you talked about this a couple weeks ago, but how we had that kind of tax break or whatever it was, vacation for a few months back at the end of like from 24 into 25. And now, 2026 being that we did have the GST, there was obviously a big uptick from February last year to February of this year. That's kind of what they're explaining in simple terms.
Yeah. And I mean, really kind of this 2% year over year core CPI trend, which is like right on target for what the Bank of Canada looks for, compares to 2.8% a year ago. And it's just the slowest it's been since April 2021. So all good things in that regard. What, will be, I guess, over the next couple of months. And like we've been talking about this, with where oil prices are, is how that is going to affect the March numbers when they come out and so forth going forward. Right now, these CPI numbers are good, but it's also indicative of our unemployment rate being up and a number of job losses and people hurting where they can't go and afford to spend money or anything like that. So there's not as much demand either, which is also what's happening in the broader economy as to why these numbers are also falling. But from a headline perspective and from a mortgage perspective, it is positive.
So Dave, one of the interesting things I saw that you put in the show notes here in prep was the Bank of Canada probability distribution. So it actually shows kind of like the meeting dates for the rest of this year, the expected target rate, and then kind of the percentage of there being no change. And I thought it was an interesting chart because if you go, from now until July, the lowest percentage is like a 75% chance of no change. But then you get to September, October, December, it's literally 50-50 or less, meaning as of, in 6 months from now, even the Bank of Canada doesn't know currently what's going to happen or what the expectations are of that drop. So when we're talking 3-5 years down the road and people are asking us our opinion, like it really is just an opinion. Like nobody has a crystal ball. Nobody knows for sure. Like even the Bank of Canada, as we said in this, there's just so much change happening right now and so much movement in so many different markets that it's literally probably the hardest time ever to predict like where rates are going to be 1 year, 2 year, 3 years down the road, 5 years down the road. So I just thought this chart was very kind of indicative of that and kind of explains in like real terms how challenging it is to know where rates are going to be in the future, just because there's so many things that impact it, so many influences.
Yeah, I mean, really, in it, the only thing that any sort of mortgage professional, like I said at the outset, can do is look to what those smarter than us are putting together, but also what the overall broader market is expecting or pricing into markets, and really kind of going, and looking to that to help try to guide people in what's coming. But there's so much out there that can affect it, and really kind of the biggest risk to mortgage rates, when we're talking mortgages, is crude oil, the WTI crude staying above $100 per barrel per month, or for months rather. Because if the Bank of Canada responded with hikes, it would be elevated mortgage rates. Like they would overstay their welcome. And they want to avoid a situation that we had in 2023 of that uber crazy rise in and overstaying of bank prime. So again, we'll see how things pan out. Hopefully this kind of gets resolved sooner than later, this conflict, this war, whatever you want to try to call it, because, obviously, like we keep harping on, it has impacts on everything.
Yeah. And just generally speaking, like this spring market is always typically the busiest time of year for the industry as a whole, as we know. And March break is kind of that catalyst. The warm weather is kind of the catalyst. The clock's going forward. Like this window is kind of the catalyst that usually pushes people kind of out of hibernation realistically and out into the market. What is I know we talked about predictions at the beginning of this year, but like, what do you expect to see over the next, let's say, 2 months as far as just market activity for buyers and sellers?
I really think it's going to continue to increase in activity. I think that we're going to see, and I still stick with it, even with all this conflict, like, or what I mentioned at the end of last year or beginning of this year in our predictions, was seeing kind of that slight elevation in pricing in the average in Ottawa. We're going to see market activity slowly pick up. I think it'll be more of a typical spring market than what we had last year. I think people are used to rates where they're at. And I don't think there's going to be a huge spike, but I think it will be a busier, a more prototypical spring market, in the sense that people, like, rates have come down, they've stabilized, if you will, and people aren't as shocked in what they're seeing, because people have come up for renewal and they've been thinking about it for months, because they're coming up this year. They know where they're at. So it's not like the 6%. It's not a surprise anymore for people. I think with people are going to get out shopping more, they're going to look to move. Their mortgages are up anyway, so like, the heck, I'm just gonna, that upside down size is just gonna happen because of that, because their rate is gone anyways, so they're not, wanting to necessarily or needing to, in their mind, I need to stay in this home because of this 2% rate. So I think it'll be a more prototypical market.
Yeah, and I think the other thing too that people, there's two things here. One, I think there's always kind of a lag in the market based on like what is happening in real time. So for example, most of the conversations I have, and I'm sure you have as well, is with clients that expect rates to drop. Like they're waiting for rates to drop even further without understanding that rates have gone up over the last, say, 2 weeks. So there's kind of like this bit of a, and sometimes it's short, sometimes it's only a day or two, sometimes it's weeks where people, like the general market thinks one thing and the market's already shifted elsewhere. Like we see it all the time. So right now, I think people expect rates to be lower at times than the conversations we're having. And that's kind of, this always happens whenever there's a bit of a spike in rates. But the other thing to consider too, that you mentioned, is that there are a lot of people that have been thinking about, we're coming up for renewal. How's this going to impact us? What can we do? That is also creating more of these listings that we're seeing. Like we've seen, there's been a big uptick in listings, obviously days on market drop, but listings are up year over year from last year. And I imagine when the March numbers come out, we're going to see similar stats. So, people coming up for renewal, one of their options is also downsizing or selling, renting, like things
Selling
like
that
that.
rental.
So there is a lot.
Like selling a rental.
Sorry?
Well, they've got
Or
a
selling
single
a
family
rental, yeah.
home rental, that they've had tenants in. Their rate is in the 2%. So like, you know what, we're going to ride this out because we're crushing principal down. We're barely paying any interest. And now that they're up for renewal, I think we'll see those properties come back on the market. And I've been hearing of investors thinking just that and looking to put those product back on the market, which is, unfortunate as well, because the likelihood is it's not going to be picked up by an investor, meaning that there's that property type for those townhomes or single family homes are going to be off the market. That'll be, what'll be, I think we'll get into that more next episode when we have the Korea stats guy on to touch on that more.
So Sean Cathcart will be here next week. He is the director and senior economist, housing data and market analysis at Korea. That is a mouthful. That does not fit on his business card. It does fit in his signature. So we're excited to have him on. We saw him recently at the Ottawa Symposium, and he had a lot of really great numbers, statistical data. So we're excited to have him on. Numbers don't lie, so it'll be good to kind of take a look back at that. Dave, I think we slide into the boosts.
Let's do it.
How do you feel about some boosts?
Boost me.
So I have 3 today. Number 1, I opened a bakery that only sells broken pastries. The business is crumbling, but the turnover is fantastic. Number 2, given that it's March break, where do math teachers go for spring break? Times Square. Times Square. Could be times cubed. Number 3, why should you wear glasses in math class? Because it helps with division. Helps with division. For all you math nerds.
Gosh.
Spring break related. You know,
I
we're
know,
March break
I know.
right now, Dave. So here we go. Thank you, everyone, for putting up with us, for listening, for supporting the show. Thank you to our amazing sponsors. And as mentioned on the onset, if you want to reach out, you have any questions about mortgages, Dave and I are here. Our contact information is in the description. Sean Cathcart will be here next week from Korea. And we'll see you then. Have a great week.
Deuces.